So I also woke up a little late. So, you know, when there's too much money in the market, you tend to sleep late. You want to maximize every little bit of the penny on opportunity you see in the market. So sometimes you're just caught short by sleep. But when the market is good, oh man, you can't help. Even sleep tries to disappear, but as it is part of human nature, someone has to rest. So has to be a little bit fresh probably in the next day. So yeah, it is only sleep. It's only sleep that cuts us short. But there are days and nights when really the market would be giving a lot of opportunities, a lot of opportunities in the market, and you feel like you should complete and finish all the money, but just that because we cannot finish all the money, there is too much money in the exchanges and in the market, so we really cannot finish all of them. Yeah, so we are going to continue with our class, with our learning, and yeah, I'm going to continue with our learning such that we see what happens. So that we see what happens. But otherwise, I hope you guys tried to go through what you shared yesterday, especially in using the MACD indicator, combining it with the other indicator we looked at the day before, which is the stochastic RSI. I hope my audio is clear. Am I audible? Am I audible enough? I hope I'm audible.
Yes, yes, but you need to amplify your voice more. You need to amplify more.
Okay. Okay. Is this okay? When I sound like this, is it okay?
Yes, it's okay now.
Okay. I don't know. I really don't know how to. I don't know whether it is my nature. There's a way when I'm speaking, I don't want to shout. Sometimes when I speak loud, it seems to me like I'm shouting. But bear with me. I hope the most important thing is as long as we're getting the message, yeah? As long as we're picking something. Yeah. So we're going to continue. Today we're going to look at yet another indicator, another powerful, beautiful indicator. And it's one indicator that that we tend to use a lot. And part of it we tend to recommend in the settings of the Royal Q board, which most of you are so fond of. But today we're going to look at it in a different angle as a tool, as a support tool in making analysis in the market. But before we go through that, I think yesterday when we were having a class, I think we were having our eyes on one of the coin. Maybe we can quickly go through that just briefly, and we'll see what happened then. We looked at this coin. It really didn't pump that much, but for whoever had made entry, probably got his or her 7%. It went up to around, I think, 7 or 8, this coin. This is what we had looked at previously. I left the drawing that it was there. So we anticipated that maybe in the course of the day, in the build-up in the course of the day, we would have it hit the 10% mark. But nevertheless, it delivered greatly, a very good percentage from where we had drawn then. It gave up to around 7.5%, which was not bad. It wasn't really bad. If you had hoped for the 10%, even by now, you'll still be floating in profit if you still hope for the 10%, and which is going to deliver. I'm pretty sure the course of the day, it's gonna give you something. It will build up, it will retrace, it will pull back, but definitely that is the direction we most likely see it heading to. So for those who still want to keep on the trade, you can be patient. For those who feel like they can take off whatever it is, yeah, take off that and relax, maybe wait for the next pullback around some support zone here. Around here, it's trying to pull back, but the pullback will be around there, and then you shall see it rally back up. But if you want to take whatever percentage, if you had entered it yesterday and you're floating now in profit, yeah, first bag that. Open the zip, put it in, close the zip, and wait for the next. Yeah. Yes, but it's going to build. And that's why yesterday I was so much emphasizing the aspect of making entry at current price, because as long as you make entry at current price with your good analysis and establish some margin calls, you will realize that much as it pulled back, it really did not pull back so much. Meaning, probably if you had set some few margin calls, probably would have taken off maybe 1 or 2, because according to our measurement, we had roughly about -9. We had in the settings or in the margin call, we were catering for up to a drop of -9. So if you had established and distributed it accordingly in the manner that I'd recommended, in the order of increasing figure, it would have bought a 1 or 2 margin calls probably here. This, let me see, 1 or 2. This could have been from point of entry. If you had entered at market price, yeah, it would have covered some 1%. I mean, some one call at least. Okay. And if it had covered one call, probably that means because it dropped to roughly around 2%. So probably if you had established it in that manner with good multiple buying ratio settings that aims at doubling, putting it twice, moving the average price twice closer to the market price, that means your journey probably would have started from here. Not here where we entered from, but it would have started midway, probably around half, because by doubling the average price, making it twice closer to the market price, that means whatever dip or whatever drop the market makes on a particular coin, with that in your mind, with your setting customized in such a way that your interest is to move the average price twice closer to the market price. That means the 2% would not be something to you. That means your average price would have been moved twice, not half. If it were half, it would be maybe around here, midway. That is at 1%. That's where your average price would be. But if you move it twice, probably it will be 0.5 or something, or 0.75 around there. So that means probably the average price, your journey to floating profit would have started around here. Okay. So to you, as people were looking at probably 7%, for you, you are in 8 point something, 9, close to 9%. You see that? To you, who are actually allowed your robot buy that one margin call with a proper multiple buying ratio. So there is just some beauty in the setup, that if you discover that, it is good. Yeah, it's good. And if you get to know it, it's really good. Because for you, that is the aim. And this particularly for those who are doing sports trading. So it helps a lot. You don't just have to allow or set your robot in such a way that it should just buy. It should buy objectively. All right. It should buy with a purpose. You should be intentional on your command to the robot, what you want it to do, what you're instructing it to do. It is you who knows. It is you who know what you want. It's you who understand you know, the psychology of trading. So command the bot to do exactly as you wish, not as it wishes, you know. So if you understand that aspect, and then you will command your robot accordingly, and always you will be in the positive side. Okay, so that side, today I want us to look at a different indicator, a new indicator, not a new indicator as per se, but another indicator that shall aid in our trading journey as price action analyst. I hope I'm still okay. I hope we are still good. We are still, the audio is fine, right? This is fine for everyone. I hope it is fine for everyone. Like, can you make our entry twice? I don't get it. All right. Just a minute. Just a minute. Okay. And we proceed. Because the area I'm gonna handle now is super, super duper beautiful. Very, very beautiful. And if you're missing here, then you're missing in action. Because once you miss it, you're lucky. Leader Doris is always recording. I don't like recording. I always want you to learn. Be part of the class. Learn. If you miss it, okay, another day better. Okay. Let me get back here. Let me share my screen again. I was trying to drop and alert my team members of the smart traders to be here. Some of them ask a lot of questions, but because they miss, they always, some of them miss, and then they want to take you back. Who has that time? After the call, people go and begin making money. Sometimes I really also prefer just being quiet. I also make my money silently. You know, it is, you know, when you're making money, it is you who knows what you want, right? So for you, if you have time to waste, you have time to, you know, to laissez-faire, you know, to slay around. You can slay. And then you think you're going to come back and disturb me. Hey, oh, I didn't get this. Man, come to the call. You know, the time spared here is for sharing, it's for learning. Always make it the point in your life to have some moment of learning. At least. Now, sparing this 1 or 2 hours just to learn something or to add on what you already know and have, it's good. It's beautiful, yeah? It doesn't kill the whole day. It doesn't kill the whole day. So just program yourself. If we Africans, sorry to say this, but we Africans fear programming ourselves. We want to be free. Yet in the freedom we are trying to establish for ourselves, we are not financially free. How can you be free when the pocket is when the pocket is full of cockroaches? Yeah, you will only be free if you really wake up in the morning and you don't have any stress of whatever thing to think about, because it's just a snap of a finger. You want to have a heavy breakfast? It's your choice. You can order for anything you want. You know, you want something and it's not, you know, you're not getting it right. Just say, you know what, let me go and look for some opportunity to grab something from the market. Within some 5 minutes, you have some $50. Can't you go and slay there? Yeah, you can now go and slay with your $50, $20. You spend it and take it back on yourself, and you know, you find that you'll always sort out your problem. You won't have any problem. You'll have a lot of peace of mind. Guys, if you want stress, you'll be without money. You'll grow old. You will look twice older than your mates. And you will begin even speaking to yourself, and they may think you're running mad, yet you're really not. You're planning and imagining things that are not there and not in existence, simply because some stress factor is killing you. Money is not there. The things you want to do, but there's no money. You begin speaking to yourself. You want to eat some meat. The family is demanding, and you begin walking on the road. You know, you're just there by body, but you're not there. You know, in speed, you know, just there. The body is just there. They see you signaling and talking, but Man, until you find yourself talking to yourself aloud. If your plan was you had promised the family that today you're gonna eat meat, all the children, you hustled around and didn't get it, on going back, you'll now say, today you will eat beans. You find yourself speaking aloud. I experienced that in some taxi some days. Sometimes back, some guy was thinking and thinking, signaling, and then the guy busted into a serious, loud, thoughtful thinking. He spoke aloud and said, no, they will eat beans and posho. Before he realized I was looking at him, then he said, hey, how are you, man? That I'd already seen. I realized that it wasn't really easy for him. Being a father is not good. It's not easy. He was a man. We're sitting in the taxi. Yeah, busting out aloud, in a taxi, and you were lost in thinking and in thought. And then you find yourself just speaking aloud. You say, no, they will eat beans and posho. Do you know what that means? That means that guy could easily die. So people are going through a lot. So if you get a chance to learn something that would improve you or take you to another level, don't take it for granted. Okay? Seems like a joke, but it's reality. It's not even a story. It's a true life story. I experienced it. I saw someone, in that state. And that's when I realized, oh, man, people are going through a lot. So poverty is bad. Poverty is bad. If it could be seen, I think very many people will spend sleepless night fighting that poverty. Real action. They will even buy they may even buy missiles to shoot it far away before it can cross their zone. Okay, let's come back. Let's come back to our class. All right. So today we're going to look at this indicator. The indicator we're going to look at is called the Fibonacci. The Fibonacci. Now, most of the times, some people call it the Fibonacci retracement tool. Some people call it Fibonacci tool. Some people call it, you can call it whichever way you want to call it. But the most important thing here is the Fibonacci indicator is what we're going to look at, or we're going to talk about. And let me just clear my chat, how we can do that. Just do this. Yeah, so let's try Let's try to fight this poverty now that we can. There's no any better. Let me tell you, there is no any, and I'm going to emphasize this. I will say it over. I'm teaching my children about it, and there's no any better opportunity of making money with a lot of peace of mind other than trading. There is no. Yes, there are other avenues that can help you make money, but man, if there is only a space where you determine what you want, how much you want, and when you want it, it's in the market. It's in trading. And this is real. For those who have been in trading for some time, will tell you this, will testify to this, and they will attest to this, that there is no any better peace of mind you can get anywhere other than in trading. Yeah, you can stake. That's fine. You can hodl. That's okay. You can do what? The different avenues. You can, but if there is anywhere you can get a peace of mind, my friend, it is in trading. I know it. I experience it. I see it with me. It's unbelievable. Sometimes when you share this experience, man, for me, ever since I started trading in 2021, man, I was like, why did I even go to school? Like, sometimes I ask myself, why did I have to spend over how many years? Let me see. Nursery 3 years, primary, 7 years, that's already 10. In our country, there is O level, that's 4 years. A level, that is another 2, that is 16 years. Then you go for a course of 4 years at the university. That's 20 years of your life studying what actually may not even be applicable in real world. Making you study history of America as if you stay in America. Making you study history of what happened when you were not even in existence. And and you are forced to even recall them and describe them the way they were, the way they happened, as if you were there. Those are imaginations. So there are a lot of things I realized. I said, I think we really wasted a lot of time, and I'm glad that for us, our government is trying to, as I think, woken up, is trying to shift the narrative, the direction of, there's no longer going to be so much of the theory, but rather practical. There are a lot of levels that are going to be scrapped, but intended to go professionally, which is good. Because 20 years, honestly, 20 years of your life. Remember, you start school probably maybe at age 5 or 6. So roughly about 25 years, you are really doing a lot of nothing, other than just waking up very early in the morning, going to go and study why the European came to Africa. Can you imagine? Why the missionary came to Africa. And that to soften our hearts. Not a bunch of nonsense. So I'm changing it. I'm trying to change the narrative. Even my children should know that, my friend, if we want financial freedom, yes, it is good to study, but you have to think twice. You have to go skill wise. Okay, so let me just add this indicator. So that was just a by the way. So the indicator we're going to look at, we're just clearing my chart so that we have a clear chart. The indicator we're going to look at is the Fibonacci. Now, just like I said, other, let me just look for this thing. I want to look for this. Okay, it is here. So it is called the Fibonacci. Okay, this is the Fibonacci. Some people call it the Fibonacci tool. Some people call it the Fibonacci retracement. Others call it the Fibonacci extension. But the most important thing is, what is its purpose or use to you as a trader? Now, the Fibonacci is one of those different indicators. It's also a trend indicator. So it's more of it's a technical tool that traders use to identify what we would call the price reaction zones or levels within the market. Okay, and these price reaction levels or zones that we talk about most often is actually what we refer to as the support and resistance. Okay, yeah, so not theoretically, but manually, from first principle, we are used to the fact that sometimes for us to go real price action, it's upon us to identify, first of all, one, the trend, okay, to us identify what trend that is building up in the market, or what trend that built up in the market previously to get to where the market price is. And then it's upon us to identify the different price reaction levels, okay, within that kind of movement, by so looking out for the swing highs and the swing lows that were established in the course of the market movement, the market price movement. So it is always up to us to look to do that, and then try to, after locating them, we establish, we draw, we capture, or we demarcate or mark those zones. And then it is from there that we are going to base on to actually identify possible or potential entry points, and then the exit points, okay? Or where we could probably buy from and exit the market from. And for futures trader, you're looking out for where to take a long position and then make some profit. So that's what we're used to doing. Now, the Fibonacci here comes in with already unestablished parameters that will help you, first of all, automatically locate these potential price reaction levels. Okay? The only thing you need to do is identify the area, the zone from within which you want to make your analysis. Okay? Just identify, you demarcate like we did yesterday. You just demarcate the area within which you want to do your analysis. Okay? Then you just connect the two key points. And here it's about identifying the swing high and the swing low, and then connecting the two. And upon connecting the two, you're going to have unestablished potential price reaction level within the two key points that you have actually identified or marked. You see that? So it's more beautiful. It reduces that aspect of, thinking, or, is it the one? Could it be this point? It brings it out clearly for you automatically. All right. Yeah. So now what the Fibonacci does is that, and as it is building up, it uses what we call, it establishes these zones, those price reaction levels, based on what we call the Fibonacci, the Fibonacci ratios. Now, I believe some of us are familiar with this, but for the consumption of those who are still new, probably this is their first time attending this technical analysis class. The Fibonacci tool, it bases on the Fibonacci sequencing. It bases on the Fibonacci frequencies to come out with what we call the Fibonacci ratios. These Fibonacci ratios are actually those potential price reaction levels, what we would refer to as support and resistance, within the range within that you're going to draw them. Okay? So the Fibonacci bases on the Fibonacci sequencing to establish what we call the Fibonacci what? Those Fibonacci, the Fibonacci ratios. Now, what you must also know, is that the Fibonacci sequences are sets of numbers. Maybe let me explain this today, probably, maybe so that we may have an understanding there. That the Fibonacci sequence, the Fibonacci numbers or sequences are like series of numbers where each number is the sum of two numbers before. Okay? Why this is very important? Because remember, we tend to recommend the Fibonacci. There is a strategy we recommend with those trading with Royal Q, that when you're going to set your multiple buy-in ratio, you base on the Fibonacci sequence, right? Or you would call it Fibonacci numbers. We tend to, that is one of the recommendation, and is one of those the best settings of the multiple buy-in ratio. Actually, the second best. Yeah, it's always very nice. Now, these Fibonacci numbers, they are a series of numbers, just like I said, that where to get the next, you need to add up two numbers previously. And they're simple numbers. They begin from 0. The first two, of course, is 0. Then you have 1. Now, to get the next, you will add 0 plus 1. So the sum of this is 1, and that will be the next number. You get that? Now, to get the next number here in the sequence, you're going to add the 2. The 1 plus 1 to get a 2. Then here you'll have a 2. Then the next sequence number is adding this 2. You add 1 to 2 to get a 3. That means the next Fibonacci number will be 3. And then to get the next, you're going to add this 2. So it will be 2 plus 3 to give you 5. Okay, then here will be a 5. Now to get the next, you're going to add the 2. That means it is 3 plus 5 to get is it 8. Okay, then here will be 8. Now to get the next, you add 5. You're going to add 5 plus 8 to give you 13. That means the next number is 13. Now to get the next, you're going to add 8 plus 13. That will be what? 21? Yeah, 21. Now, if you get 21, the next would be 13 plus 21. That is a what? It will be 20, 30, 30, 34? 34, right? Is it 34? Yeah, mathematics. Then to get the next, you add 21 to 35 to get 55, and so on. So that is how we derive the Fibonacci sequence or the Fibonacci numbers. Now for us, for the recommendation, like people will take it differently, but for me, what I recommend when you're going to use the Fibonacci numbers in setting your multiple buying ratio in your robot as you customize your settings, I recommend you beginning for the first call. Okay, these are call drops, and then you have multiple buy-in ratios. So what I normally recommend is, this is the second call, third call, fourth call. If you're going to base on the Fibonacci sequence, you take your first buy-in amount as 1. Okay, then the first call to be the next Fibonacci sequence number, which is a 2, right? Then for the second call, what will be the next Fibonacci number? What will be the next Fibonacci number after 2? We already have 1, which we're taking it for our first buying amount. Okay, that initial entry amount. That means the robot has already bought once. Okay, so that means we are looking forward to the next sequence. Because remember, the goal, just like I said, our goal is not just the robot buying, but we want a significant effect on our average price. That is the goal. We want a significant effect on our average price, whereby if a robot buys any call or if it makes any call, it should have a significant effect on this average price, meaning it should move the average price more closer to the price at which it executed that buy order, all right? Or where it took that position. Okay, so every time it is buying, the interest is you move my average price closer, because as it moves the average price closer to the market price, you will also see a significant decrease
agenda kukuba
from
nga balinayo
most
omukozi
percentage.
nabbi Dawudi
Okay,
agenda kyaza
yeah.
ebiti
Now
bya
this
deal.
one here. This man.
Kale so at least omusajja kumakya n'oyiggalawo nja kukuba.
Yeah, I just wanted you to get rid of that one. That one does not know what he's doing. Business. And it's not respectful at all, because if he was, he would understand that this is a session. Yeah, just help me do that. Help sort out those guys, because those are the guys that you know, they they disturb me when I'm going through a class and someone, interrupts. It resets me, it takes me back, which I don't like. Anyway, they are physical class. The ones who will get ngolo, they will get a knock on the head. Okay. He's lucky. This is a free class. Those are the children who would be told, now your father is wasting. Your father is wasting his paying for. He's wasting money paying for your school fees, but his luck is free. I would even raise. Anyway, let me leave it at that. Okay. I would have reserved certain information, but let me just let's go. Let's move on. Let the sleeping dog continue to lie. Let's just go on. Let's try to understand, ladies and gentlemen. There's always a moment. For me, I always tend to give people time, or there's just some minutes that I'll always give out for us to interact, or probably give you opportunity to ask questions. Yeah. Let's also try to let's behave. Okay, let's behave. In the chat, it will always be addressed. Okay. Yeah, let's I believe all of us are mothers and fathers here, serious parents who are looking out for ways of making ends meet for the family. So I expect you to be a little bit reasonable, yeah, and hungry and really very hungry to make sure you discover what is it that, yeah. Yeah. Okay. Is my network bad? Somebody's saying the network is bad. Is it cutting? Is it cutting? Is the network okay? Okay. Sometimes, It's okay. That's technology. We shall just go like that. We know you don't control this network. We're also trying. If you had the power, we would control it. But there's no way. We're also just going to maneuver and we see how we can move forward. Yeah. No, normally, sometimes the network, MTN, here sometimes then their network disturbs, and yet it is the most used network this side. So, okay, let's go back here. Share my screen, and then we come back here. All right. So I hope we understood that concept of how to build or come up with a Fibonacci sequence here. You just need to begin from 0, then you write a 1, then now from there you keep on adding, you keep on summing up the two numbers, to get the last two numbers to get the next, just like that. And as I was saying, when you're trying to set your bot based on the Fibonacci sequence, you put 2 as your multiple buying ratio for the first call, and then from there keep on putting the next sequences, which will be a 3, a 5, and then an 8. And for as long as you still want to keep allow the robot to continue buying as the price is going probably against you or down, you keep on looking for the next Fibonacci sequence. That way, though it is a little bit tricky with futures trading, just like I said yesterday, but if you have the capital, you can still allow the bot buy, because what it will be doing there, the goal is the average price, but also the challenge comes when you're limited with capital. That means the more the robot buys, the more you're exposing more capital into the market. And if you have little capital, that means you're tending towards the liquidation price. So which is really not good. But yeah, most of the with a good analysis, or probably a good signal, that setting really stands out, and it's always good. It delivers very quickly, and it gives you really right results or good results. But for the sports, it's the best because really you're not worried of any liquidation. So you just want to buy and buy. And if the price continue going down, it's well, because there's nothing to lose. You know it is going, but it will come back. Okay. Yeah. So now let's just like we said, that the Fibonacci indicator or tool tend to derive the Fibonacci ratios, because the establishment of those support and resistance is based on the Fibonacci ratios. Okay, it is based on the Fibonacci ratios. But to arrive at the Fibonacci ratios, you need to understand or know the Fibonacci sequence. Why? Because for you to come out with a Fibonacci ratio, it is always you divide a number in the sequence with, hey, now this is very, very interesting. You divide a number in the sequence with the third number in the sequence, or the one which is in the third place. I don't know whether it makes sense. I don't know. Does that make sense? You pick a number in the sequence, then you divide it by a number in the third place, or with the third number in the sequence. Does it make sense? I don't know. Because I want us to see how those ratios come in, and then, yeah, because it is what we're going to really base on. Yeah. So does it make sense? Does it make some sense? Hey, for you to come, not yet, you'll understand. First of all, the common Fibonacci sequences that we use, that we tend to see on the chart, on the Fibonacci tool indicator, are 0. Yeah, so it's 0.236. That is one of the sequences, the common one. We have 0.382. We're going to see that as well. We have, there is a 0.5. Then there is a 618. There is a 0.78. There is a 0.78, right? And then there is a 1. There's here a 0. So these are the common sequences we tend to see. Because why we tend to see all these are the most commonly used sequencing, upon which, we relate it as the potential price reaction levels that are going to be established upon drawing our Fibonacci on the chart, is that this Fibonacci level tends to, this Fibonacci tool tends to track through the movement of the market by 100%. Always, the market moves by 100% before a pullback or a retracement happening, what we'll literally refer to as market correction. The market will have to, first of all, take a journey of 100% movement, and then, if at all it is still continuing, it has to pull back. That aspect of pulling back is in an attempt to gather momentum, to continue its journey in that particular trend that it was actually going or maintaining. All right. So the Fibonacci tool, what it does, or indicator, it tracks that movement, that 100% movement. Okay. So meaning literally that if the market price was rising from this point to this point, it will track this movement from 0 to 100%, and then upon the movement hitting 100%, it will have to pull back. Okay, it will have to correct. Okay, now these pullbacks do not just happen randomly, they happen within the Fibonacci ratios, because these Fibonacci ratios are actually the automatically established support and resistance. So in this case, since it is an upward movement, you expect it to pull back within the Fibonacci ratios, which in this case would be supports. So any movement in that manner and a pullback or a retracement, it will be directed or intended to move to find what we call a support level. Okay? Yes, because a support level are all levels that are established below a price. And resistance level are all price reaction level that are above the market price. Okay, so in its retracement attempt, it is looking out for where this price is going to be supported so that it can have that continuation of the previous trend. Now, once it reverses in an attempt to maintain this previous trend, the journey again begins reading from here. The zero will again be here. You'll have to again take your reading. This would be a zero. It will track through that movement after the breakout by another 100%. And then it's going to pull back again. So it will be a continuous process for as long as that trend is in that manner. And as long as the market price is on the rise, it will continue maintaining and tracking through that movement. 100% a pullback, 100% a pullback. At every pullback and a reversal becomes the starting point. Okay? So these pullbacks are always happening within the Fibonacci ratios. So that's why it is very important for you to know these Fibonacci ratios. Okay? Because Fibonacci ratios in simple terms are like they are simply those percentages, the percentages that are established, as support and resistance upon which the price either bounces or reverses from. Okay? The goal of using the Fibonacci ratio, the Fibonacci tool, is one, to identify potential price reaction zones. And when you talk about price reaction zone, support and resistance, you want to identify, because it's going to guide you a great deal in doing the second thing, in accomplishing the second reason for using the Fibonacci, which is identifying entry and exit zones. This entry would be like the buying zone, or you would call it also a point where you take long position. And then the exit will be like the TP, when you're now taking profit, or where you would actually execute a sell order. Okay, where you will make entry to go short. You get that? So the Fibonacci helps you in doing that. That is why it is very important and very key and powerful. You get that? And then, most of all, it will also help you at the end of it all predict the potential price reversal points. When the market price is rising, you really can't assume that it's going to rise forever. By having the Fibonacci, it helps you know that, for this far the market price has gone, there is a likelihood, there is a high chance that the price is going to reverse. But you are not sure where is it exactly most likely to reverse from, so that it can have the opposite of the movement. The Fibonacci indicator answers that, because it will help you by establishing those price reaction level. At least you're certain to some degree. And there's normally how that works. Okay, there's normally how that works. All right. So now, having understood, so the Fibonacci sequence, just like I told, the Fibonacci ratios are got by dividing a Fibonacci number. Let me just use a number by the third number in the sequence. Right? By the third number in the sequence. And I want us to do this together, and then maybe later on say that. I'm going to pull out. Okay, before we do that, I'm going to take, for example, we now know the different sequences, these different numbers of the sequence number. And the common one is we have 0 point, as I said, it is 0 point. The common sequence, we have 0, okay? Then we have 100. This 100 is sometime 1, and this remains a 0. Now, then we have from 0, we have 0.23, right? sometimes even add 6, which in terms of percentage, it would be 23.6%, right? Then we have what we have the next being 0.382, which in terms of percentage would be a 38.2%, right? Then we have 50. Now I have to talk about this 50. 50 necessarily is not a Fibonacci, a Fibonacci ratio, okay? It's not a ratio, but most of the times, no, it is 0, not 50, but 0.5, which in this case is 50. So it's not necessarily a Fibonacci ratio number or a ratio, but most of the times it is commonly used. It is found on the chart on the indicator because it normally acts as a half pullback within the 100% movement. It is literally regarded for a half pullback it divides that movement, the 100% movement, by 2. It's more like an average point, okay, dividing the 2 different zones, the other 50 up and the other 50 down. Yeah, though also sometimes prices tend to pull back to them, but it's mostly commonly used because of that aspect of that. So it's not necessarily a Fibonacci ratio. Then we have the next one after 50 is 0.68, and then which in, of course, in terms of, I mean, not 8 but 1. It is also 8. Yeah, that's also a sequence. There's also 8, but there is 1 8, which in percentage is 0.61. It is 61. Sorry, it is 61.8%. Okay. Now this is from what you have been learning. Okay, for those who have always been attending, this is what we call the golden ratio, the golden Fibonacci ratio, right? The golden one, the most amazing pullback. Most amazing pullback happens around there. It's called the golden ratio. It is the strongest level where reversal often occurs. Often, like so many times. Okay. Yes, it can happen at 23. The pullback can happen, a reversal can happen at 23.6, but it is a weak pullback normally. Once the price pulls to that level, we call it a weak pullback. Then maybe if it pulls to this level, we regard it as a moderate pullback, just moderate. And then the common one is the 0.5, but the strongest, which is the golden ratio, is the 1.8. It's where most of the pullback tend to happen. So if the price is to continue, okay, most of the times once it pulls back to that, it's a sure continuation of the price because the next breakout will be powerful. Okay, will be powerful. So you'll begin your reading again from the 61.8 and then you measure through. Okay, so it's good. Now the 78, okay, there is 78. Apart from this, there's 0.78 and I think 6. I think it's around 6. 0.76. Yeah, you'll correct me if, but it is, I think, 0.786. I think. But we shall check. We shall confirm on the tool. And so there's that before we go to the 100 to the one, which is the 100%. Now there's 0.786 Fibonacci ratio. It's most of the times once the price pulls to that level, okay, and you're going to confirm this. You do a lot of your confirmation. You try to draw them and then see really what happens when the price pulls back to that zone. So most of the times once it pulls back to that zone, it's literally a price reversal. I mean a trend reversal. It is normally a trend. There are always low chances of the price continuing in that previous trend. Okay. Once it pulls back to 78.6, just know that trend may most likely not continue. It may that may be a sign of a reversal to the downside. If it was on an upside movement, it is a clear sign of a downside. So literally what it will do most of the times, it will let me just clear that. If that was the movement, okay, let's say this was 0 and that is 100. If the pullback comes all the way to 0.78, this number is 6, I think. I hope I'm able to recall that it is 6. But yeah, around, so it is 78%. 78.6, I think. So if the pullback comes back to this zone, there's a very, very high chance that this pullback may not be a pullback, may not be a really retracement anymore. Okay? It may be now a trend reversal to the downside. If it was continuously on an uptrend, once you see this pullback, you need to be more careful, because yes, it will try to retrace in an attempt to go up. It will deceive. You know, there's so psychology of trading. It will deceive you like there is always a 50-50 chance. Most of the times, once it tries to move, it goes back to the 61.8, and then before you know it, boom, it goes down. So it comes and breaks that zone. So normally, most of the times, it is for my own experience, anyway, most of the times it is a trend reversal. So once it pulls back to there, just take very little TP, maybe to the 61.8, because you know there's a likelihood that it is gonna drop down. Okay, this will be a sign of that. But if it pulls back to the different fib ratio levels or fib levels, maybe the 23, the 38, maybe the 50, the 61.8, it's good. It's good, especially on the 61.8. That is the golden ratio. It's where most reversal tends to happen. At least you're sure you have some level of confidence that it's going to come back and break the other previous level and then continue up. Okay? So I needed to explain this so that when you go in the chart, it really makes a lot of sense to you now. Okay, so that you have a better understanding about that. So that is how that comes about. So I was trying just to explain briefly how the fib ratio comes in. The fib ratio, just like I said, if you're, for example, pick, let's say 13 in the sequence, we have 13. Before 13 is which number? Before 13 is which number? Before 13 is what? Is it? Which number, if you're following? Which number? Which number was that? Before 13. Which number? Yeah, this one is a beginner. Don't worry. Yeah, don't worry. You'll be there. You'll get there. Okay, 8. Yes. Yeah, before 13, there was 8. So let's divide the two, because we are going to pick this. The 13 is where our interest is. So we want to look out for which number do we divide by 13. Okay? Which number are we dividing by 13? So that we get that ratio. And we try to go and check if it will be. So if when you add this to this is what? What will be our next sequence? It will be 20. Is it 21? Is it 21? Yeah. Then that means if you add 21 to 13, you get 31. You get 34, right? 34. Then when we add 21 to 34, because that is the next number is our interest, because we said we pick a sequencing number and we divide it with the one in the third place. I mean, in the next third place, or the one in the third place in the sequence. Yeah. The third number in the sequence. So after the number you've picked is the one you're going to divide it. So that means this one is how many? 20, is it 50? 55? Is it 55? Michael or say you must also help me out with the math, okay? Is it 55? I think so. Okay, so we have picked 13, and then we want to get a Fibonacci ratio. So we picked 13, we're going to divide it by 55. So divide it by 55 and give me the answer, please. Divide by 50 and give me the answer in the chat. Give me the answer in the chat. What is that ratio? What is going to be that ratio? What is going to be the ratio? Didn't it? What will be the ratio? .26. Is it? Yeah, 0.26. Good, beautiful. So that means we're going to have 0.236. Is that one of our sequence, our ratio at least, which is the 23.6? There are very many, yeah? There are very many, but we're picking up that. So let's see. There are very many sequences, but we tend to pick the key one. The Fibonacci picks out the key one. So let's try to see if we pick 21. We're going to divide it by the next. So that means we need to, if we pick this as the sequencing number and we want to get the next ratio, so let's try to divide, which will be that number we are supposed to divide it with. This is the first number, second, we're supposed to divide it by the third number. So the third number we're going to get by adding these two, which will be 34 by 55, that is 89, is it? Is it 89? Yeah, if it is 89, you first try to divide. Let's see what will be the number, the next sequence number, ratio. What will be the next ratio? What will be the next ratio? Will also be a 0.3, 0.236. Okay. 0.236. Okay. Let me do mine. Let me try to do mine here. And I say, I'm getting mixed. Try. Go there. Hey, baby. Okay, I got it's 0.3. Yeah. Okay, so but in the sequence, oh, you see my screen? Just a minute. You cannot see my screen. Let me share. Let me just reshare. Try to share here. Okay. Can you see my screen now? All right. Yeah, so the order is, so we have got, oh, it is clear. So we got 0.23. Then in the sequence, when we see 0.236, we got that by adding, is it 13? Divided by 55. So in the sequence, we have 13, we had 20, is it 1? This, yeah, 21. Then we had 30, what? Is it 34? Then we had 55, right? Is it? Okay, let's try to divide this because I'm trying to arrive at something. But because what I know is, the ratio has to be got by dividing numbers within the sequence. You just divide them, okay? So with this, we see if we divide 21, let's divide 21 by 5.
Coach Musa, not clear. Is it my internet? Is it my connection, or is everyone experiencing the same?
Everyone, I think so.
It's very true. Everyone is having the same thing.
Network has thrown him out.
I mean, the question.
Network has thrown him out.
Sorry, guys. I think I'm back. That was a network break. Sorry. Okay. Let me share my screen. Yeah. So, I don't know what you got. Okay. May I go when you divide 34 by 89, you get 0.8. When you divide that next sequence by 55, meaning 2 places, I think yes. So that means if 13 we divided by the third place sequence number, that means if we pick 21, we should divide it by, is it? Guys, my network is beginning to misbehave. I don't know. I hope it really takes us and we finalize on this. I'm not happy again. It's I don't know. It's just jumping and reloading. I don't know. Let's try it one more time. Let's move on. If it fails, then we see what to do. We can resolve something. Yeah. So basically, what I was saying is that the establishment of the Fibonacci ratio is really not so important to us. Okay. It's not something that it is a must that for you to use it, you need to first, establish the ratio. No. we were just trying to reason out and think aloud together and see how we arrive at the Fibonacci ratios. Because in reality, the Fibonacci ratios upon which we depend on as our support and resistance, that is actually established on the Fibonacci tool, comes about by you picking numbers within the sequence and dividing with another. So meaning literally you pick a smaller number in the sequence and divide with a bigger number in the sequence for that to, to come out with those ratios. So we are not supposed to do it ourselves. We're not going to do it ourselves. You can go and read more about it. But the most important thing is, I was trying to bring out the picture of how those ratios come about. How does it establish those support and resistance? We are talking about the Fibonacci ratios, where the pullback happens. How do they come about? So it's just what I was trying to help you understand, that you divide, it is established by dividing a number in the sequence with another number. But the number going to be divided with should be bigger than the number you've picked in the sequence. So just that, okay? And we saw an example that to get the 0.236 ratio, we obtain it by dividing 13 by 55. And when you want to get maybe the next 0.38, it is got by dividing the next number, the 21, with the 55, or you can divide the 34 with the 89. It's just the numbers within the sequence that are divided for you to arrive at that. But for us, for our own consumption, we are interested in how do we use the Fibonacci. And the most important key things there for you to take note of is, if you have specific Fibonacci levels that are going to be selected, there can be very many, but the one we are going to base on, which is on the Fibonacci indicator or tool, are actually the 5, okay? We have the 0, we have the 23.6%, we have the 38%, we have the 50, we have the 68. Yeah, also maybe with the 78 and then the 100, but for us, we're interested in where do we have a possibility of the market price pulling back to, in case it is continuing to move up. Because our interest is, we want to see if it's going to pull back on this particular level, maybe we prepare to make entry. Or if it is within this particular zone, maybe we should prepare to exit the market. That is the interest. So I'm going to share my screen again and then just show you how we use this Fibonacci on the chart, so that we can, try to establish how to make entry, or where to make entry from, and where to exit the market from. So allow me to share my screen again, and we move on. Because my network now wants to misbehave, so let me go a little bit faster. Faster. Where is my view? Oh. You open it. Okay. So I'm going to bring the fib indicator. Now the fib indicator has to, you can use it in two ways. There is the manual one, where it's you who actually adds it and draws it on the chart. And then there is the auto one. Now the auto one is the indicator. It's called a Fibonacci retracement indicator. The manual one, it's called the Fibonacci retracement tool. So we are going to begin with the unit within the list of tools, the drawing this pencil. When you tap on it, we call the fib. So this is when you want to use it and be intentional. You can be objective, you can demarcate, you can, put the area within which you want to make your analysis in, and then you capture the measurement within then. Okay, so for you to put it on the list of your tools, the drawing tools, you can long press on it, and then once you long press on it, it will ask you it will ask you to add it to favorite. Then once you tap on add it to favorite, you will see a star here with a yellow background, meaning it is already part of the favorite. So when you want to use it, you just simply tap on it, and then you identify the area where you want to start your drawing from and where you want to end. Now, take this very seriously. When the Fibonacci tools always the Fibonacci tool always tracks or monitors an established trend. So meaning even the auto indicator, once it is going to be drawn, it will be drawn on already an established trend. All right. So because remember, the goal of our analysis is we use what has passed to predict the future. So the same applies to the Fibonacci indicator. It will be established on an already formed trend, an already established 100% movement, so that you can now use it to identify where the possible retracement will be to take up the next 100% movement, right? Yeah. So for example, if this was the movement, you're going to have a 100% movement. This is 0, and then this is maybe 100. If this was a 100% movement, okay, and then there is a sign of a retracement happening, or there's a sign of market price drop happening, what the Fibonacci indicator will do is it will capture, for it is going to take consideration of this already established movement, the 100%. Now, it will be upon this 100% movement where it is going to draw, it is going to locate and establish the Fibonacci ratios or the Fib levels, okay? It's going to establish the Fib levels. So to you as a trader now, you're going to base on this established Fib levels to predict your possible trend reversal, the price reversal points or retracement levels, okay? This is where we're going to have the different Fib ratios. And of course, I'm going to take it that this is our 61.8. So what you're going to do is you're going to monitor the movement of this retracement. You're going to monitor the movement of this pullback, okay? Once it comes back, once it pulls back to any of those Fib level, you be prepared to make entry. Now, put at the back of your mind, this is best for a preset, but you can also use it at a current price. It's good for a preset because once you see a pullback happening, you know there are key retracement levels or there are key pullback levels. There are levels you are at least sure, you're not very sure, but you have some level of certainty that once it pulls back to this region or this point, there's a likelihood of it retracing and beginning to go up. At least you're sure, based on the Fib levels that are going to be established. So if this is a 0.236, this is a 0.38, this is a 50, this is a 0.61, and then this is a 0.78. What is going to happen is if the pullback comes to 23.6 or 0.236, you know that it will either be supported here and then you see this reversal, or it is going to continue down to the next Fib level. Okay, at least that is what you already know. That's what you'll have in your mind. If it pulls back to 0.38, you know that once it touches the 0.38 Fib level, there's a likelihood of it reversing and wanting to go up or beginning to move up. There's a likelihood. You're not sure whether it will happen, but there's a likelihood. But at least you have some level of certainty that that is where the reaction is going to happen. Okay? So it will either react to it by reversing, or it will again still continue to go down to the 50% Fib level, or possibly to the golden ratio, the 0.618 Fib level, okay, before it reverses. Now, what is most interesting here is why this would help you prepare in advance is that you can go ahead and put a preset price, okay, to any of those levels, all right? And I'm going to show you how that happens, but let's try to go through how. Let me just try to draw the manual one. So I'm going to track through a movement Just allow me to track through a movement or try to draw a movement and try to capture that. So I'm going to assume that this is a movement 100%, and then there's a likelihood that there is the price trying to reverse. So we don't know how much it is going to pull back, but we are going to use the Fib indicator to try to locate the possible pullback zone. So I'm going to pick here. If it is an uptrend movement, you draw your Fibonacci from down, and then you pull it upward. If it is a downtrend movement, you're going to put your Fib from on top, and then you drag it downwards. So if you're putting it to monitor through an upward movement, you're possibly putting it on a swing low and connecting it to a swing high. Okay, take note of that. You put it on the swing low and then you drag it towards where the swing high is. So meaning literally, as you're going to be doing that, you need to have identified your swing low and your swing high, upon which you're going to connect your Fib from swing low to the swing high, so that you can have the Fib levels established for you. Now I'm going to do this, so I'm going to put it here and then I'm dragging it upward. So let's do that. So I'm going to take it that this is my swing high. Okay. So do we see that? Do we see that? Okay. So this is a journey. So we have the movement being tracked from here to this point. So the price rose by that. Now we have our Fib levels already established for us automatically. We have this, we have this, we have that, that, and that. Now this one are in percentage, but in terms of ratios, this would be the 0.236. This would be the 0.382. This would be the 0.5. This would be the 0.618. This would be the 0.768. And then this would be the 1. You get that? That is if you were to use the ratio. Okay, so you can use a ratio or you can decide to use a percentage. It depends on how you're going to set it. Depends on your preference or your choice. It's you who would customize it how you want it. Or you can either leave it in the default, which is in ratios, or you can change it to percentage so that you really see them. Now, in this movement, you are now very sure that the way the market price has already moved by 100%, since it is pulling back, there's a chance that it will pull back to this point and then reverse, but you're not yet sure. There is a chance also that it will pull back to this level before it reverses. Same applies to this. Now, the best you can do as a trader, now I'm telling you what you're supposed to do. If you capture this movement, or if you go add in the Fibonacci indicator on the chart, and then it captures that movement in this manner, and then you've come across a scenario where the price is still up, it hasn't really touched on any of your Fib levels. The best you can do is set your preset at any of those Fib levels. Most importantly, set it from here. You begin your preset from the 0.382 or at the 0.382. So the beauty about this Fibonacci is that even after having established those price level, it gives you the exact preset price in bracket. It gives you exact price where that line runs and touches on the price line. It gives you in bracket. So like in this case, it is telling you that according to this movement that I have drawn, since this is a chart, of course, it has to take note of the price. So according to this movement here, okay, the 38.2% Fib level runs and cuts and touches on the 0.07227 price on the price line for this coin, which is AGT, okay? And if you check the 50% Fib level, if you were to extend it, it will run and touch on the 0.06927 price here on the price line. So the beauty about that is that it even gives you the price where the line touches. Imagine. It's amazing, right? It's amazing. It touches, it shows you that, you know what, this line runs and, you know, and cuts across the price on this very specific price, you know. So that's the beauty. Isn't that amazing? Isn't that amazing? Hey, isn't that amazing? I'm going to now show you how we're going to continue and show you how now you create a preset. okay, and then establish margin call drops. I mean, the margin calls. Or if you want to enter current price, you make entry and then establish your margin call drops accordingly. So is that okay? Are we still good up to that point? Because we are about to conclude. That is, that's amazing. Good. Yeah, yeah. You're not seeing my screen. Okay. Yeah, you don't have to calculate. It will just be there automatically. You don't have to calculate, okay? Alex, it is automatic. That, what we were trying to do earlier on was just to try to share how that the fib ratios comes about, okay? But it's not important. It's not what you're supposed to do. Your work is only to know how to use the fib tool. Those things are already there automatically embedded. It just comes out by itself. You don't have to cram it. You don't have to master it. But we're just trying to create an understanding for you to know, because you need to know sometimes how some of the things come about, right? Because if we talk about fib ratio, you should know what a fib ratio is. If you talk about fib sequency, you should know that, okay, these are sequence of numbers like this and that. So it's just for purposes of you understanding. Yeah. So about that it will be something you need to calculate. No. Okay. Yeah, it's easy. Just take it easy. Okay, so let's wind up now. How do you use this fib tool to make entry? How do you use this fib tool to make entry? Just like I said, for the manual one, it is you who is supposed to draw it yourself. But for the auto one, it draws itself automatically. It's just a matter of tapping on the fib indicator and it will be loaded on the chart automatically. You don't need to identify any swing low. You don't need to identify any swing high. Okay? It just draws it based on what has happened previously. So it's like you leave it to decide on how it should draw it. But with the manual one, it's a tool for intentional, analysis. You're doing it intentionally. It is you who knows where you want to start from and end when you are, in capturing your analysis. You want to start from some point and end at some point and have a vision of that area. So in this case, the most important thing here is if you're drawing, you should be based on a previous trend. So how to use it is, number one, if you're going to use the manual one, the first thing you're supposed to do is you identify the trend. What is that trend? What is that current trend? Okay. And for you to know the trend, you need to base on the current price. So use based on the current price and then reflect back and see what was that trend before coming to the current price. So just like I was saying, like here in this case, we're going to come here. If I'm to use this, for example, you see this? You see this? I'm going to use this just. My interest would be to capture this movement from here. I'm not going to mind about the others. I'm going to capture my movement from here. This is being intentional. So this is my area. So I'm going to capture the movement from here. Okay. So to me, from this point, this becomes my swing low, and then this becomes my swing high. See that? Then this becomes my trend. So it means this was an up trend. Let's follow this, because it's going to come out it's going to make some sense to you. So if that is the case, so I'm going to come here. I'm going to pick I'm going to pick my fib tool, and since this previous trend, I'm not basing on what is building up. This is something which is still work in progress. Okay, but this is what has already been established. It was already a movement before this retracement happening. So what is happening here is a retracement. It's a pullback. It's a market correction happening. So I'm going to base on this previous established trend to draw my tool. So the first key thing is you identify the trend, the previous trend, right? So you pick your tool, and after having identified what that trend is, in this case, which trend is this? It's an uptrend. So for us to draw our fib on the uptrend, we connect the swing low to the swing high. So meaning we are going to put the fib indicator on our swing low, and then we drag it upward to touch on our swing high. Okay, so let's do that. Okay, let's bring it here. Okay, here, and then let's drag it up. Let it touch there. Okay, And there we are. There we are. Okay, so we have our swing low, and then we have our swing high. And this was our movement. Now that done, we now know, we have established, we now have our fib levels established already automatically based on this movement. Based on this movement, based on the previous movement, we now have our fib levels established for us automatically. Now, these are our price reaction levels. They are our support and resistance levels already. Based on what was happening, that is what has been captured. The calculations were done, the ratios were established, and they are the price reaction level. Now, because they've already been established, how do you now make entry? How do you use this now? Normally, because our interest is to base on what happened previously to predict what is most likely going to happen in the future. We see here that there is a pullback that has happened. This pullback has gone past the 23.6% fib level. It has moved past the 38.2% fib level. It is around the 50% fib level. Actually, it dropped slightly below the 50% fib level, but between 50 and 61. But our golden ratio fib level is the 61.8%. Once the price pulls back to the 61.8%, it's a momentum. It's a beautiful, it's a great pullback. It's a golden opportunity to make good entry. Okay? So your intention is you're preparing in advance to take action. So literally what you would do here is, it will be upon you to decide on how you want to make entry. One, you can decide to enter at current price, or you can decide to enter at a preset price. If you decide to enter at a preset price, what you're going to do is you're not going to enter exactly where the market price is. You're going to set your preset at the golden ratio fib level. In this case, you will set on your board this as your preset price. So you're waiting for the price to drop to your fib level, the golden ratio, before the buy order can be executed. So you are instructing your robot, hold on, wait. It seems the price is still coming, it is still pulling back. So let me set a trap here. As the animal comes, it will come and then just get trapped in my trap, right? So you're setting it as a trap. You're waiting for it to come. You're waiting for the ball to come for you to head. So it is coming. Let it come to you. As it is coming, since this is your preset here. So what is happening here is what I would do if, in this case, I want to enter at a preset price. I'll pick my price range. Number one, first of all, I know this is my preset. So I'll take a measurement from my preset if I want to take partial profits, I will always ensure that I take profits within the range. Take profit within the range, right? So there is the first range, which is at 50. So from 61.8, as the price comes on touching and then begins going up, I know it is going to encounter a reaction level, a price resistance level, which is at the 50. Because any reaction zone above your market price is not taken for granted. You don't have to take it for granted. It's a price reaction. It has an effect on the price movement. So when I take whatever profit, no, take it within. You already have Okay. Let me wind up. Let me wind up.
Okay, all right. So guys, I think it's network. Let's see if you'll be able to get him back here. Or if not, I guess maybe we have to wrap up. Then see the next day if God permit tomorrow.
All right. Sorry, guys. I think maybe okay. I think let's because of the network, let me handle that part of making entry, establishing margin calls, and tomorrow. Let's have that hammer time tomorrow. See how we can handle that. We have been so much interrupted with network. It's not our make, but yeah, you have to sometimes abide. That's what has already happened. So let's see how we do that tomorrow, and we see. Yeah, Airtel is good, but also, yeah, I have an Airtel line. Maybe tomorrow I will try to use an Airtel line and see. Use an Airtel line and then we'll see. Yeah, but it's something that I believe at least you picked something from what I just shared today. I hope by the time we end the week, you'll be good to go. Just like I told you, we may not really share everything, but I believe that the little that I will share may be beneficial. And if you follow them, you use them, it will be something. You can at least have a starting point, okay? Yeah, you can have a starting point to continue progressing in the learning. Yeah. So I always try, what we only do, we try to just give you those basic to paint a picture, okay, of how it is, especially when you become a trader. And just like I always say, and just like most other leaders always say, the real art of the learning is in the doing. So you need to always try to practice them, okay? Try as much as possible to implement, okay? And then take your time to continue furthering your studies. Do research, continue learning, go an extra mile, do certain things. If need be, let's not be rigid. Let's not be so, there's this English I wanted to say, but let's be hungry. Let's be hungry for knowledge. Let's be hungry for skill. If it takes you even, spending a little resource, come on, it's a possibility. Some of us who got to know this, it did not just come, okay? We also had to spend a little bit of resources to learn. But if you had not done that, probably, that's what we call breaking out, breaking the chain, breaking out. If you had not done this, probably it would have also been difficult for us to share with you, right? We wouldn't also know, we wouldn't really learn, we wouldn't understand. So sometimes you need to, it's a self-sacrifice. Skill is something that stays with you forever. It's something that lives with you. You're going to impact it and pass it over and over to your family. It's good. And this is the only direction to go. If you join Royal Q, the direction to go is to empower yourself, enrich yourself with skills, enrich yourself with knowledge. So that number one, you don't fall victim of any scam in the space. And two, you know what you're doing. As a trader, you really should be knowing what you're doing. Okay? Yeah, because I wouldn't buy the idea that you'll be a dependent on signal. Now, suppose the signal is not dropped. So will you not trade? Are you going to be a dependent on signal forever? It's not bad. It's an offer. It's something which the community tend to do, to offer. But I mean, if you know it, if you learn, if you have the skill, it's important. You will not have to wait for the signal. You can wake up any time of the night. You can wake up anytime. You can any time of the day. You can just, as long as you feel it is worth it and it is convenient, you go into the market. Check on how the market is performing. If you feel that there are opportunities that you can take action from, and then you take it. You know, and then for me, it has reached an extent for me, and I'm not just proud about it, and I'm not bragging, but the truth of the matter is, for me at the moment, sometime, if I want to do something, or if I have a plan of doing something, I know where I'm going to get the money. And I'm always very sure, and even when, if need be to make a promise, tomorrow, this is going to happen, I'm going to do this, inshallah, I always know, you will always know that, okay, if you need some $30, you know where to get it. It's not, you're not going to beg it. You're not going to do, you can make it anytime. You can make it at night, waking up in the morning, it is there. You already have it at hand. You can promise someone in the afternoon, okay? And before you know it, you sit yourself down, look at the analysis, look at the market, do whatever you do, get the 30, and finish up whatever you wanted to do. So it's a beautiful thing. It's a beautiful experience that some of you should also take up that and then try to do, okay? Royal Q, whoever will always tell you that Royal Q does not work, that person is not only mad, that person is insane, that person is ungrateful, that person is every kind of negative words you can ever say, okay? Because if you understand that Royal Q is an aiding tool, it's a supporting tool, it's something that is trying to make trading easier for you, you'll appreciate it to the dot. Because honestly, I know some people have tried different, even trading bots. But to me, I know a number of them, by the way, are now about 5. I know some of them, most of them came later on and trying to imitate and trying to borrow a lift from Royalq. But Royalq is a step ahead. It is a step ahead. It's really a step ahead. And whoever tries out the other will always look for ways of coming back. And, east or west, home is best. Royalq is like home. So stay on, stay put, and continue. As long as you learn, you have the right knowledge, right mindset, and skill, Royal Q is like your ship. It will sail you through. Yeah. So thank you very much for being here on the call. Thank you so much, Brother Emmanuel. Thank you so much, Leader Saul, and a couple of leaders. Weibo, you are here. Doris, thank you so much for being here always and for your supportive mindset and heart to keep the community winning. I am always very proud on what you guys do. Okay, I'm very, very proud. It's real sacrifice, honestly. Royq does not pay anyone to do that. Really, Royq does not pay anyone to organize Zooms. It does not pay anyone to impact skill. It does not pay anyone to teach people how to use Royq. That's why I tell you it is a business entity. Royq is a business entity. They have brought you the bot. They have given you the service. It's up to you how to decide on how you want to use the service. For them, as long as you pay them, they have nothing to, they have no problem with you. Use the bot the way you want to use it. If you can finish all the money, do it. They have the service given to you, but they will never teach you on how to use it, right? They will never teach you to organize Zoom. They will never pay for your Zoom. It's self-sacrifice. So sometimes that's why I commend these leaders. And whoever tries and wants to point fingers on some of these leaders, I take them as people who are not serious, because if it is easy, then they should also do it. If it is easy, then go and do it, right? You also do what the leader is doing, because it is entirely sacrifice, honestly. It is purely sacrifice. So let's applaud them. Let's give them their flowers, because it's not easy. I know challenges were here where some people went through some challenges and something happened and people thought it was the end of Royalq. People thought Royalq was dependent on some people, specific people. No, it isn't. Royalq is not dependent on me. is not dependent on any leader. Royal Q is an independent business entity, and it is a business entity as that. They are also interested in making the money. They also want to make the money, much as like you also want to make the money. As much as you want to make, they also want to make. So it's a win-win, okay? So everyone wants to be in business. You also want to win, they want to win. So let's continue winning together, okay? Otherwise, saying anything that is like negative, my friend, then that means for you don't know what you're doing. Some of us who started this 2021 and we saw through the challenges that came along and where we are and whatever what we are, and with when we relate it to whatever we have achieved, we only say glory to God. We really say glory to God no matter what, because it takes only a grateful person, a grateful man, to be a grateful, to establish a grateful empire or destiny. So it's up to you, okay, to choose and see what is going to happen. Trust in the process. The best is yet to come. I trust even Royal Q. They're always in constant revision and redesigning of their strategy. They also see, they also observe, and they also know things are going to be better. We have never had promotion, but now Royal Q is bringing in a promotion. Imagine. We have never had that. Can you imagine? We have never had a lot of things that we had never had before. But just to show you that, the brain behind Royal Q are really, they don't have any negative things against the people trying to promote and use the Royal Q bot. Just see what they are doing. They also listen. Yes, they also want to make money, but they also want to make it, they also want to come out with strategies that will also enable them make the money as we also make the money. So they're also looking at, things, because anyway, I wouldn't speak so much because this is not the session for it, but I know maybe time will come, we shall have that session. We just talk about Royal Q generally. Look at the positive sides of Royal Q, and maybe also if the negative is there, we'll also talk about it, and then we see how we can always maneuver and appreciate the best bit, because it's not about it's not about the negatives that makes you successful. It's just how you use the negatives to, to break out. How you use, because every problem must be an opportunity, right? Every challenge must be an opportunity. There's always an opportunity in every challenge. It only takes that person who doesn't see beyond the problem, who will be wimping and then will give up. But if you know that even in death, when someone dies, yes, you will cry, but someone is looking at an opportunity. Imagine somebody preparing a coffin. That is an opportunity. Yes, it is a problem, but it is an opportunity to make money. Do you know why they're making the coffin? Not that she's their prayer, but they know it is inevitable. It's just like a problem. It is unavoidable. Problem will always come. But are you able to maneuver and move out? Okay? So it's just that. When someone dies, it's an opportunity for someone to make money. The people who organize burial services will make money. The people who prepare a coffin will make money. The transporters will make money. You get that? Even those who are hungry will have something to eat that day. They will eat. They will feast. Those who are taking years months without eating meat, they will have a chance to eat meat. So it's a win-win. That's how the world is. Okay. Yeah. So let's just continue moving. So I'll see you guys tomorrow, and probably in the next class, because I think there's Brother Manuel. There's a class, right? There's a class later on.
Yes,
I
yes,
think.
yes.
So you guys should join the next class as well. There is so much to learn from also in the next class. Yeah, we tend to partition and handle the things bit in bit so that we have a all-round knowledge, and we're good to go. So I will see you guys tomorrow. And I dropped my YouTube channel link yesterday. But also this recording will be shared in the Royal Q Revolution group. But for those who may just want maybe a few videos to also just learn from a few things, let me just share. It is called Smart Traders. Initially, it was Galaxy Crypto Academy. That's Okay, sorry. So let me just give you that for those who may just want to learn a few things from there. It's okay. It's called Smart Traders Academy. There's just a few videos that may help, yes, in the settings, in the how to draw the support and resistance. Yeah, you will learn from there. If you don't get a chance of being in the class, but also subscribe. Okay, yes, do you subscribe so that yeah, you keep posted whenever we share some of the things. And it previously was called Galaxy Crypto Academy. I believe that is what you guys mostly used to know. It was Galaxy Crypto Academy, but then I later on changed it to Smart Traders Academy. So that is the new name. Yeah, just like the previous one was Doris Angel Hub, something like that, where normally these recordings are shared. It was previously Doris Angel, but after things changing, then it had to also be changed to Royal Q Revolution. So yeah, so you can always go and find it there, find those videos, share. And Brother Emmanuel, if there are a number of channels from different leaders, there's always one or two things you will always pick from there. Okay, don't restrict yourself in learning. Just be open. Okay, be broad, be open, be intentional, and it will be fine. Yeah, so that's the YouTube. That's my YouTube channel. It's called Smart Traders Academy, and then yeah. All right. So with that said, I think guys, let's end here. Let me also go and do other stuff, and yeah, we link up tomorrow same time. Brother Manuel, thank you so much for being there, and then Leader Saul. Let's catch up tomorrow, please.
Thank you very much, sir. Thank you.
All right. That is great.
You're
Thank
welcome.
you too for your time. God bless you.
You're welcome.
Thank you, Brother Emma.
Yeah.
All right. So guys.